Good morning, everybody. Hey, welcome to this Monday, the 12th day of August. Hey, we'll get in the flow here in just a second. It's been a little while to be on a regular basis after our sabbatical, but good to be back in. This will be my first full week back in the office, and glad you're joining us today as we get ready to talk about what's happening from an economic standpoint and some earnings that have come across the board. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. However, you can take control of your portfolio by knowing the amount of risk that you have in that portfolio versus the amount of risk you should have in that portfolio, and then having a plan together. Give us a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
105.7 Highlands Light FM Chicago is there. Hey, good morning. How are you this morning? It's 8:39, 21 here before 9. Time to check in and find out what money's doing on Wall Street for us. And, oh my goodness, I missed it when he came back last week, but drum roll, the one and the only Phillip Statler from Statler Financial Services in downtown Sebring is with us this morning, live and direct on the phone. Phillip, good morning. How are you?
Hey, good morning, Dave. It is good to be back. This will be my first full week back in the office. So glad to be back. I had a little downtime and spent a little time in Italy checking out the historic sites. So but I will tell you, Dave, it was hotter over there than what it is here. So there was no weather relief.
When we were talking before we went on the air, I said the weather geeks call the climate we have here in this part of Florida Mediterranean, and I think you might have just discovered firsthand the reason for that. It feels pretty similar, muggy and humid, right?
Exactly. So,
Welcome back, though. We're really glad to have you back. Last week, I was saying that this was a roller coaster, Monday through Wednesday while I was here, and you and Doug filled in on Thursday and Friday and got a little bit of the recovery. But boy, if you wanted to get acrophobic and go on a roller coaster, that'll do it to you. Beginning part of the week, we had a major dump on the indexes, and both the NASDAQ and the Russell 2000 both went solidly into correction mode. And I've been kind of going up saying for years now that as high as the index numbers are, I kind of wonder whether one or two indexes going into correction is good enough to have that effect on the market and get that reallocation done. Looking at the recovery for Wednesday through Friday, I kind of think that might have made sense because, boy, we had a banner day on Wednesday, didn't we?
Yeah, we did. I think it's about the best day we've had since either 2020 or 2022. So, but here's kind of what the numbers look like in terms of last week, right? It was a terrible day on Monday. I mean, people were just beating their heads against the wall. It was so bad. But if you get through Friday, overall, it wasn't a bad week, Dave. The S&P 500 was down a whopping $2.40, less than 1%. The Dow Jones Industrial Average, probably, I mean, other than the Russell, was the worst. It was down 240 points, or 0.6%. NASDAQ was down a whopping 31 points, or 0.2%. Like I said, Russell was the worst, down almost a little over $28, but that was 1.3%. But everybody's still positive for the year. Even the Russell up 2.7% for the year right now.
Which makes it kind of interesting because when we start looking at the historic graphs 5 years from now, and it just quotes the end of the week closings when they do just weekly checks on the multi-year charts, we aren't even going to notice last week, are we?
No, it won't even be a blip on the radar.
It does need to be noted that the NASDAQ index is still officially in correction mode. If it continues on the way the futures are looking this morning, it'll be out of correction by the end of the day today. And basically, like you said, blip on the radar and not too terribly much more. It was really interesting to watch the conventional wisdom geeks going around. Monday, when the market was really tanking, and on Tuesday morning, a bunch of analysts were saying, boy, the odds are really good that Paulson is going to call an emergency meeting and reduce interest rates immediately. Kind of funny how Jay Paulson must not have gotten that memo he was supposed to do that, and calmer heads prevailed.
Well, that's true. Even Jamie Siegel, which is a guy I follow quite a bit, he was really calling for, that emergency meeting, and even he by Wednesday had lightened up and we probably don't need to do that now.
Like I said, calmer heads prevailed. Somebody went on decaf and finally said, "Oh, wait, corrections are supposed to happen multiple times each year," and we recovered adequately. It looks like we had a pretty doggone good bounce, especially during the 2 days that I was out. I can say this, that though, at the very least, that experience and the volatility of the week, now they're saying in Chicago, the people that put the odds on it, they're now pricing in basically a 100% chance of a full half-point basis cut when the Fed meets again next month, and that's going to be like adding heroin, I think, by the end of the month of September when we get that number in, wouldn't you suspect?
I think that may put a lot of fire under some of the indexes, and especially the NASDAQ and the Russell, who depend on so much borrowed money. So, but I was reading an article, Dave, that consumers are really travel is really starting to suffer, and that's because the consumer is finally to the point that they have no more money to spend. And so the even travel now is starting to see a decline in productivity, and so that was that's one of the things that had kept us going the last year or two, is people were so eager to travel after COVID that there was a lot of pent up demand. Well, now people can't afford that pent up demand anymore.
Absolutely. Putting stories together that I had while you were gone for a few weeks in there, that, last month the consumer credit card debt hit an all-time high and actually just slammed through the ceiling. And on the reports that I'd been getting from travel-related companies, they were kind of drawing that picture as well. Guidance, even if they made their numbers, guidance for the rest of the year coming out of the travel-sensitive companies that I got reports for, almost universally conservative. I mean, they're not expecting a great second half of the year in the travel industry at all.
No, they're really not. And if airlines can't get their acts together, believe me, I suffered some of Delta's issues, not because of the cyber strike, but just in general. Trying to get home was a little challenging.
In a small business, cutting staff really is obvious because it's a measurable percentage. But, Delta trimming just a few employees, sometimes that can make a major difference to one customer stuck trying to transfer flights without the proper information, right?
That's absolutely right.
That said, talking about the travel sector, on the other hand, earnings season has not been all that bad. The FactSet folks came out with some numbers this morning. Standard & Poor's 500 companies so far this earnings season are pacing a 10.8% year-over-year earnings growth, and that's the highest growth rate since back in 21. You and I have been banging the drum now for over a year that even though companies are beating the street 70, 75, 80% of the time, by and large, for the last year or so, they've been reporting lower absolute earnings. Now we're actually finally getting on the growth trend again, which I'm considering good news for overall economic health.
Absolutely. If we can year over year grow earnings, that's obviously going to be a good sign for the markets as a whole.
Yep, and it doesn't take much to get the optimists out and going crazy in the process. I mentioned this when you first got on the phone with me. Some wag this morning on MarketWatch was saying that 150,000 Dow is possible by the end of the decade. We got a lot of ladders to climb before we can start getting into that kind of nosebleed territory. But it's funny what happens. The optimism goes crazy as soon as we have one good recovery. Hey, the sky's the limit, and maybe we'll just slam through the sky while we're at it, right?
Yeah, that's a little overly optimistic, I think.
I'd call it smoking something weird. I'll go a little further. Anyway, just to summarize, Friday turned into like you said, a pretty decent day, almost a full recovery for the mess. Dow was up by 51, Standard & Poor's was up by 25, NASDAQ up by 85. You'd think happy days were here again. What have you got 45 minutes before the market opens this morning, Phillip?
Well, right now I've got a slight tinge of green. The Dow Jones is up between 1/10 and 0.2%. The S&P 500 is up almost 0.25%, and as well as the NASDAQ 100 up almost 0.25%. On the other side of the coin, we've got silver up 1.1%, but well off its highs at $27.88 an ounce. Gold's up 0.4. Crude oil, Dave, I really liked it better last week when I looked at crude oil. It's up 1.3% to $77.84 a barrel.
I was just ecstatically happy when it went below 80 a couple of weeks ago. I won't even complain that badly of that. Overseas markets, the Asian Rim kind of had the tail that we've had all along. The Chinese mainland markets were off this morning. Everybody else pretty well up on balance. The Asian Rim was a positive experience at 6 a.m. when they closed. Europe, now that the Olympics are over, everybody's pretty happy, except for the French. They're down by a little bit halfway through their trading day. But the index overall in Europe is up fractionally by about 0.2% halfway through their trading day. If you're looking at the stock market every day and going, oh, my God, what's my retirement going to be like? This could not have been a fun week for you last week. Time to get a plan to make that risk go away. How do I find you to get that plan going, Phillip?
Absolutely, Dave. That's why I developed the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And something I absolutely love saying, I'll see you tomorrow morning here on Light FM. Fair enough?
Fair enough, buddy. Glad to be back.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Do you actually?
Hey, folks, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Take care now. Bye.